gold that is loaned out to bullion banks, which then sold the gold into the market and is only represented by an IOU on the central bank accounts, that gold is still reported to the IMF as gold reserves, as if it's sitting there in their vaults. And it's obvious that it isn't.
Hey guys, thanks so much for tuning in. Hey, I'm really glad to have back on the line Brien Lundin. He's the publisher and owner of the Gold Newsletter and owner-producer of the New Orleans Investment Conference, which, by the way, is taking place October 28th through 31st. Anybody who enjoys news about the real economy and real news in general will really appreciate that conference. You have people like Peter Schiff, Mark Faber, Doug Casey, and others will be there. Tell us about the conference.
Yes, Sean, it's really a landmark event. It's the granddaddy of investment conferences. It kind of started the whole sector way back in the 1970s. It was created by Jim Blanchard after he had worked to return the right of gold ownership to American citizens. He decided to have a conference to teach American investors how to invest in gold. So he had that first event in 1974, and it's just been a blockbuster since then. Really focuses on conservative/libertarian philosophy and the role of precious metals in the markets. It's expanded over the years to cover every asset class, but it still is the go-to event for precious metal investors and mining stock investors.
Brien, I really want to talk with you today about the Federal Reserve, about gold, but specifically as it relates to the Federal Reserve, the monetary debasement, which seems to be their only card left to play, is printing money and expanding the Fed balance sheet. The Federal Reserve has lost control, according to John Williams, Peter Schiff, and others. And I just spoke with John Titus from the Best Evidence YouTube channel, who really drills down the forensic evidence of the Federal Reserve criminality. And he broke down the Fed's balance sheet for us. $2.46 trillion in treasuries and $1.7 trillion in worthless mortgage-backed securities on the balance sheet. The Fed's been talking about unwinding and raising rates and all of this other stuff that would bring us back to a sense of normalcy, right, in terms of what the Federal Reserve should be doing. Do you think it's even possible for them to unwind when $1.7 trillion on their balance sheet is in worthless assets?
Well, the only value those assets have is determined or due to the Fed's backing and buying of those assets. If you talk about the problems with the Fed, it's a question of where do you want to start. I don't think we're going to have low interest rates, high interest rates or a normalized regime of interest rates anytime in our lifetimes, and I don't care how young you are. The fact of the matter is, as rates go up from these levels, or anything approaching normalization of rates, what we're used to in a robust, vibrant economy, the interest service on that debt would be so great as to consume the majority of every new dollar created in income for the federal government, ahead of national defense, ahead of entitlements, everything else. So that's a huge political problem. The only way to get out from under the crushing load of that debt is through monetary debasement of some degree. You can't grow your way out of it. You can't hike tax rates enough to cover it. You can't cut spending. Obviously, we found that out. You can't cut spending enough to make an impact on the national debt. It's so large right now, it absolutely mathematically demands some significant debasement of the underlying currency. And that's what we're going to see. The question is only a matter of timing.
Yeah. So as we look at that Fed balance sheet and we see $2.46 trillion in treasuries, at least that's the number they're giving us. John Titus and I both believe that number should probably be far higher as people drill down into what's really been going on. With China and Russia actively selling treasuries and ditching the dollar for daily transactions, even including when it comes to buying and selling oil, can we expect to see that $2.46 trillion number of treasuries on the Fed's balance sheet? Can we expect to see that expand in the future? And if it does expand, because they're the buyer of last resort, would they even be transparent? Would they even tell us?
I think they will tell us. I think that will be obvious, and I think it would be a program of renewed, easier money policies, quantitative easing, and perhaps negative interest rates at this point. If they don't get a chance to raise rates before the next recession, they're going to have to go to negative interest rates, and actually starting to talk about that. Some of the Fed governors actually starting to talk about that as being a possibility right now. One of the things that I think a lot of people are missing are the nearly $3 trillion in excess banking reserves that are on deposit at the Fed. This is like a water balloon, a massive water balloon of liquidity hanging over the economy. So under any scenario, if you have a slowing economy, then the Fed has to come in uh, and resort to quantitative easing and other extraordinary methods. Then you have gold benefiting from that. If the economy actually improves, then that overhanging balloon of liquidity, those excess banking reserves, all of a sudden start flowing into the economy. And once it gets into the economy, once the banks that have those funds on deposit start making loans and put it into the economy, that becomes money. And under that scenario, you have the prospect of dramatically rising retail price inflation. And in that scenario, gold would also benefit. So the way I look at it, regardless of what scenario comes up in the near future or foreseeable future, gold will benefit.
Yeah, and I'm nodding here because my next question for you is going to be about hyperinflation. You know, when you talk about monetary debasement, when we know the Federal Reserve is now the buyer of last resort when it comes to treasuries, it's essentially opening up a new credit card to pay the interest on old credit cards. That's the metaphor for if we were doing this in our own households. Does monetary debasement eventually equal hyperinflation? I mean, I think you just said it does. And at what point do we see it? At what point does hyperinflation start to come to our shores? John Williams has been saying 2016 for quite a while now.
Well, it depends on how you define hyperinflation. You know, if you look back at historians years from now, will look back on this period and say that we did reach a period of extreme, if not hyperinflation. And historians look back at Roman times and the fall of the Roman Empire, and they track the inflation rates back then. And they would say that if the Roman currency lost 90% of its purchasing power in the span of only about 40 or 50 years, then that would have met the definition of hyperinflation from a historian's perspective. Well, that's exactly what's happened in the United States since the mid-1960s. Since they removed silver from U.S. coinage in 1965, the U.S. dollar has lost about 90% of its purchasing power. And that's gauged by the government's own measure, the CPI. And we know what the problems are with that. And John Williams has also documented all of those problems. So in reality, it's even been worse. So by some people's definitions of inflation, out of control inflation, or even hyperinflation, we've already seen that.
Yeah, that's right. And gold is really the benchmark way to measure the fact that they have hyperinflated away the value of the dollar since the Federal Reserve came into being in 1913. These people are criminals, and that's what I covered with John Titus. I mean, he laid it bare. He said the Federal Reserve is now acting as a sword to steal money and a shield to conceal their crimes, and we really dug deep into this. You brought up negative interest rates. I think it really needs to be explored a little bit. ZIRP, 0% interest rates, have really destroyed the savings of so many people who trusted this system. And now they're actively talking about negative interest rates. That would be the ultimate way for the Fed to actually overtly steal the money of savers, wouldn't it? I mean, it truly is criminal if they're going to go to negative interest rates. That's essentially what, bail-ins?
Exactly that. And it all harkens back, it all rests on that same foundational economic philosophy that it's a consumption economy, that citizens need to spend their money, that savings is bad for the economy. And what they're going to do is force citizens to spend their money, to not save. In effect, what they're going to do is it's going to force them to put their money into tangible assets, which are going to rise. It's something where we're just seeing the effects of negative interest rates in a few select economies around the world. For the United States to undertake that means, in effect, the whole world will be in a zero interest rate policy. And that's purely uncharted waters.
You know, your investment conference really gets me thinking. You're going to have people, again, like Peter Schiff, Mark Faber, Doug Casey. I classify these people as truth tellers, right? let's contrast their thought process and their analysis against what we see on CNBC on a daily basis, what we see on Fox Business. Let's talk about the truth. When we talk about negative interest rates and we talk about a Federal Reserve whose malfeasance and criminality has been laid bare for the world to see, really by China and Russia, right? If China and Russia were still playing ball and using the dollar to buy and trade oil and were buying treasuries, this illusion, this dollar, petrodollar, world's reserve currency illusion could go on, I think, for another 10 or 20 years if China and Russia and the other nation states were playing ball. They're not playing ball. They've decided, they've openly said and warned Washington, we're selling treasuries, we're done with the dollar. How long can this illusion go on? What do you think Schiff, Faber, and Casey would say? How much longer can this illusion go on?
Well, that's hard to say. I've been in the conference business with the New Orleans conference for about 30 years now. And I've seen the predictions that the illusion won't go on for really all 30 of those years. So it's hard to tell the timing, but it is inevitable. The Chinese are really playing the long game here. They can't just dump treasuries without hurting themselves, but they are making the gradual shift, and recently a more significant shift toward the yuan as a reserve currency. They're trying to get the yuan accepted as into the SDR basket of currencies as a reservable currency. And they're working toward that, and there are a lot of games being played. The IMF refused them initially. The Chinese were not surprised or seemingly angered by that refusal. They loosened the peg of the yuan against the dollar. So I think that there's a lot of things going on for show right now, and it's just really an accepted fact that the yuan will be accepted as a reserve currency in the very near future. I think that's one of the reasons why the Chinese have encouraged their citizens to buy gold, and at record levels. Right now, the Chinese are by themselves consuming over 70% of all the world's newly mined gold, and they're going to set a record this year for gold consumption. And that's something I don't think the mainstream media has really caught wind of or reporting.
Yeah, I want to talk to you about the SGE, the Shanghai Gold Exchange, and the withdrawals we've been seeing there. But before we do that, let me ask you, let's explore this SDR. Explore this SDR concept just a little bit further. Willem Middelkoop, the author of The Big Reset, has recently been talking about this. He was at a conference in China where it is openly being talked about that they feel trapped by the dollar and they want a way out. They want to extricate themselves from the dollar system, right, in his words. Spoken at that conference. Very public in China, not spoken about here by our mainstream media. And he talks about the fact, really backing up exactly what you're saying, that the Chinese want to embrace this SDR system. And I think the sad news for those of us who hope that the failure and fall of the dollar, the failure of the Federal Reserve might issue in a more libertarian situation for those of us in this country moving forward, a return to honest money. But if the SDR is going to be the fix, it really speaks to the cover of The Economist, that Rothschild-owned magazine, which back in 1988 on the cover had the phoenix rising from the ashes, and it said, "Get ready for a global currency in 2018." Because an SDR would, in fact, be another central banking, bankster-run currency, wouldn't it? I mean, is it a fix, or is it just what they want, a one-world currency?
Well, it's an issue that's been around for longer than I've been in this business. So really over the last 40 years or so, the SDRs have been kind of the paper alternative to gold in monetary or in central banking economic planning. I don't think it's going to go anywhere. It never has. I don't think any one country wants to give up their control of their currency in the global marketplace. There's a chance that we'll end up with gold as an actual reserve backing for fiat currencies, but I think we'll have to go through hell to get there, and that remains to be seen. But I don't think the SDRs are ever going to take hold. It's been tried before. And I think it's really doomed to failure.
Okay. Let's talk gold and silver specifically. For those of us who have been smart enough, and of course been punished for our savvy, punished for our foresight, buying precious metals over time is a way to protect yourself from the crash of the dollar, from the future devaluation, the continuing devaluation of the dollar, and ultimately an economic collapse because of the death of the dollar. What do you make of silver in the 15s and 16s? And I know that's a tired question. The reason I ask is because, again, John Williams has been citing the fact that, in 2011, the inflation all-time adjusted high for silver was $138, according to his calculations, based on M1, M2, M3 money printing. Now he says it's closer to $601 an ounce, and yet silver is now trading at a lower price than it was in 2011. For anybody who's awake and understands what the Fed has been up to, silver and gold in physical form are a bargain when priced in dollars.
It absolutely is. They both are. And really, it's the result of gold and silver being priced in the paper gold and paper silver markets of the West. And they're keeping the speculators, the shorts, the hedgies, the high-frequency traders, and whomever else is behind the manipulation of prices lower, are keeping the price artificially lower, which means increased demand from the people who really appreciate the value of gold and silver. And that's primarily in the Asian markets, where the metals have a cultural aspect to them as a form of savings and as money. In addition, we see tremendous Western physical demand for gold and silver, in particular silver, with demand running past the ability of mints to keep up. So we regret and we're angered by the fact that the Western speculators are keeping the price lower than it should be. But the fact of the matter is that's just allowing us to buy more metals at much lower prices.
Yeah, that's right. And, I'm going to just flush this out a little bit further for listeners who've probably heard me say this. Brien, but do you realize that $15 silver in 2015 equates to $2, actually less than $2 silver in 1980 dollars? I mean, people need to remember a movie ticket back in 1980 was $2.50. The median household income was closer to $20,000. Silver at these prices equates to $2 silver in 1980. So when we say it's a bargain, that's quantifiable. Let me ask you this, Brien. I know you've been following the SGE, the Shanghai Gold Exchange withdrawals, and you have some thoughts on that. What's going on with the SGE, and what does it mean to you?
Well, to really understand the SGE, we need to step back just a couple of years. When the price of gold was forced down through that orchestrated bear raid in April of 2013, it really served to spike Asian demand, primarily Chinese demand for gold. And the levels of demand, the withdrawals from the Shanghai Gold Exchange just spiked to record levels, nearly double the levels of anything seen previously. I had thought that those levels, that tremendous surge in demand was due to the price sensitivity of Chinese buyers, that they were scooping up a bargain, and that it wouldn't last, it would abate at some point. But it never did, and 2013 set a record of 2,181 tons of gold delivered on the Shanghai Gold Exchange that year. And there's been some remarkable work done since then by a Danish researcher named Koos Jansen, who blogs on bullionstar.com. And he's really the go-to guy on the Shanghai Gold Exchange and tracking those numbers. What's interesting to me is that the World Gold Council and a lot of the statistical services they use and that the mainstream financial media uses just totally ignored the Shanghai Gold Exchange for some time until the withdrawals became so large and the issue became so large that they had to recognize it, at which point they started coming up with excuses as to why it doesn't really represent domestic gold demand in China. Koos Jansen has taken on every one of those theories and debunked them. In fact, the Chinese themselves, writing in Mandarin in officially public, have said that the Shanghai Gold Exchange withdrawals represent domestic gold demand in China. What's interesting is that in 2014, demand fell off a bit, around 100 tons less, or about 4% less than we saw in 2013. What's really fascinating and exciting is that this year, in 2015, demand or withdrawals from the Shanghai Gold Exchange have soared to where they're going to significantly better the record of 2013. There's a chance we'll get 2,600 to 2,700 tons of withdrawals from the Shanghai Gold Exchange this year. When you consider that there's only about 3,000 tons mined each year, then you can see that the vast majority of all newly mined gold is being eaten up, being absorbed by China alone. When you add India into the equation, then much more of the world's supply is being devoured by just those two countries alone.
Yeah, it's just absolutely stunning. I think India is on track to take down now 40% of the world's physical silver supply this year. According to SRS Rocco, it was 33% earlier this year. Now they're on track to take down 40% of all the physical silver mined on planet Earth. It's just stunning. And then investment demand is off the charts. I have to wonder, Brien, you know the stories of how the Rothschilds and these other banking families became wealthy. They would be willing to hold the physical precious metal for people and give them notes because it was lighter, and then we'll keep metals for you in our vault. And then they realized that less than 10% of the people would ever come back to get their metals, so that they could then print up many more notes than there were gold backing up the notes. And of course, that led to fractional reserve banking and fractional reserve bullion banking. And as long as that secret remained a secret, these guys could just enrich themselves endlessly. It must be horrifying to these central bankers now that everybody wants their gold. Everybody, the jig is up. Everybody wants their gold. Give us our gold. We're tired of your fake promises and paper notes.
Well, not only that, Sean, but everyone has their gold. When you consider that gold that is loaned out to bullion banks, which then sold the gold into the market, and is only represented by an IOU on the central bank accounts, that gold is still remarked and are reported to the IMF as gold reserves, as if it's sitting there in their vaults. And it's obvious that it isn't. When Germany has to wait 7 years for their gold to be delivered, something that could be accomplished in 7 weeks easily, then you know that the gold isn't there. And it's just a common sense argument to realize that the gold just isn't there. And that's, I think, what they're really afraid of is, people opening the vaults and seeing that the metal really isn't there. There are a lot of anecdotal reports that gold hitting the Swiss refineries, where it's recast into the forms that the Chinese and other Asian savers prefer, that there are central bank gold bars that have been delivered to those Swiss refineries. So the Western vaults are being emptied, and it's all flowing from west to east.
Yeah. All right, final question. In our last interview back in June of 2015, you said, "I think the current administration is ideologically hell-bent on pursuing policies that are destructive to U.S. economic growth," end quote. I don't think there's anyone listening that would disagree with that. How do you feel about Donald Trump? How do you feel about the future? What do you make of the 2016 election, and what do you make of us extricating ourselves from this debt-based, death-based paradigm and turning things around for the United States?
Well, Donald Trump, what I really enjoy about him is he's completely politically incorrect and doesn't really care about political correctness and whose toes he steps on and really what he says. I like Ben Carson as well. He spoke at our conference not long ago, and he's somebody who is really taking on this aspect of political correctness. When I look at the presidential candidates, I'm primarily looking at them from an economic standpoint, and I think the majority of these guys have come out with platforms that are much, much better than what we've seen, obviously, from the Democratic side, but really from what's been the grand tradition of Republican candidates, which has kind of been a light, hard money or economic platforms. They're really looking to shake things up, I hope, and what we need to have is not only the White House, but both houses of Congress to really get something done. And I think that the top tier of Republican candidates, the top 3, 4, or 5, really will get in there and shake things up. So I'm looking forward to and hoping that there'll be a change in the administration.
Yeah, but we're out of easy answers, aren't we? With 45 million people on food
Yeah.
stamps and 19 trillion plus in debt, 18 trillion plus in debt. It's much higher than that, actually, if they talked about the unfunded liabilities and all the hidden assets on the Fed's balance sheet. Boy, 8.5 trillion went missing out the back door of the Pentagon, which the Pentagon freely admits. They can't account for $8.5 trillion since 1996. That's mainstream media news. That's not me. That's a fact. So we're out of easy answers, though, aren't we?
We really are. There's, as I said before, there's no way to get out from under this crushing debt load without some debasement of the currency. The question is how quickly for the U.S. dollar as compared with the rest of the world's currencies. They're all going to be racing toward the bottom of the hill, and occasionally their leads will change. Sometimes the euro or the yen will be in a lead toward the bottom of the hill, and sometimes the dollar will take over. But the thing that people need to realize is that when the dollar is stronger than the yen or the euro, the other fiat currencies, it's only for a brief moment in time, and they're all being debased. And the only way to protect yourself from this is through gold and silver.
Yeah. Okay. Well, let's finish up on a bright note then. You've got your conference, the New Orleans conference, coming up here, and that's pretty exciting. It's an opportunity for people to hear from like-minded individuals. So many of us in our daily lives are surrounded by people who can't talk about these issues because they're not equipped to. They don't understand the issues. They don't even speak the language. So tell us a little bit about the conference, and will you be making any of the speeches available online for those of us who can't attend to enjoy?
We'll have them online. We will have streaming options and very affordable streaming options online. So they can always check back at neworleansconference.com to learn about their streaming options. We also have our low pre-conference rates available for a couple more weeks now, up to just a few days before the conference. So we will be accepting registrations through the conference, and we have the low pre-conference rates up to just about the day you walk in the door. The New Orleans conference is really a smorgasbord of investment information. We're not an echo chamber. We like to present competing viewpoints, but really credible experts, the tops in the business, the most successful analysts and investment advisors out there, with a particular focus on precious metals and mining stocks. We absolutely are the go-to event for information on precious metals and mining stocks. And every time that the New Orleans conference has been held at a bottom in the precious metals, like we're seeing right now, attendees have had the opportunity to get 10 and 20 bagger investments in tips. And our experts are preparing right now to deliver those. And with the metals looking up as we speak, I think this is going to be one of the most rewarding events we've ever had in our 4-decade-long history.
Yeah, and guys, remember, the only reason that silver and gold are priced so low now is because they're priced for us in dollars. In other currencies around the planet, they're really at all-time highs and going higher. I mean, look at what's going on in Venezuela, Argentina, all over the planet. Well, guys, our guest has been Brien Lundin. He's the publisher and owner of the 44-Year-Old Gold newsletter and the owner-producer of the New Orleans Investment Conference. Brien, thanks so much for your time. This was really an enlightening conversation.
Thank you, Sean. Great to be with you.
Great to be with you. And guys, thanks so much for tuning in. We do appreciate your support at sgtreport.com. You know that we love it when you visit thephaser.com and thelibertymill.com. Real news 24/7. God bless. Have a great week.